Hi all, welcome back again to Invesfinc. On Wednesday, all the major Indian indices opened gap up and continued the uptrend throughout the day. This was exactly shared in our yesterday's pre-market report. You can watch from the link above. Today is monthly expiry for NSE indices. So in this video, let's unlock the key support and resistance zones for Nifty, Sensex, Banknifty and FINNIFTY indices. We will also dive into the stocks that made headlines on Wednesday, so stick with us to the very end for our exclusive analysis on whether their momentum can continue and how you might approach them in today's trade. Before we jump on to the details, please go through the disclaimer. Now let's begin with the analysis on indices. First up, Nifty 50. So in yesterday's trade, we saw that there was a gap up opening in Nifty. It opened at 25,150 levels and continued its uptrend towards 25,266 levels. And ultimately, we have closed just tad below those levels. However, there was already a 200-point jump that we had seen. So this has, in fact closed on a positive note. And in yesterday's video, we very clearly mentioned that Nifty is on a rising trend on the higher highs and higher lows. So if you could see, this trend is getting continued from almost 10 odd trading sessions, and the expectation is, as discussed in yesterday's video, today being the weekly or monthly expiry for Nifty, the volatility is going to remain, but the expectation is that again in today's trade there would be a positive momentum. So once we cross 25,300 levels, which was the previous day's high, the possibility is that we might move ahead in one single rally beyond 25,400 levels as well. So you can expect this rally to come in just in today's trade too. Else if in the next weekly expiry, you can see that we are going on a next leg of up move. Now for the support remains at 25,000 levels, which was the previous day's low. So overall, we are in the positive trend on Nifty, and this positive trend is expected to continue until 25,800 levels. Now let's quickly move on to open interest. So open interest, very clearly it is evident. So there is a huge action that has happened at this level from 25,000 levels until 25,300. So as you could see, at 25,000 levels until 25,300, there is a huge open interest built up on the put writings, and at the same time we could see there is a big unwinding that had happened at 25,000, 25,100 and 200 levels. So since we have already closed beyond 25,200 levels, which we were expecting Nifty to close, and since that has happened, now we can very clearly move towards the higher levels of 25,500 either in today's trading session or at least in the next weekly expiry. So we are in a positive trend, and this positive trend is expected to continue from here on. So PCR overall is 1.1, which is quite positive, and at the money is also trading at 1.09. Now let's quickly move on to Sensex. So Sensex has also been in a positive trend, and you could very clearly see this is a higher high and higher low. So this trend is expected to continue, and in today's trade, if we cross the previous day's high of around 83,000 levels, then we are headed to move to the next leg of uprun towards 84,000 levels. So overall, there was a 700-point jump in yesterday's trade, translating to 0.85% on a positive close basis. So Sensex is also expected to give a lot of volatility in today's trading session, and majorly we can expect to go longs in Sensex too. For the support remains at 82,000 levels for us, because only if we start trading below that, we should take the sell positions or maybe cut short all our long positions only once we close below 82,000 levels. Till then, we are on a uptrend. Now let's see from the perspective of open interest. So there have been, lot of put writings that had happened, and if you could see, there have been good, additions in the put writing, roughly around 50 to 60% additions just in yesterday's trade across all the lower strikes below 82,500. And since we have closed above 82,500 levels, and as you could see that the put writers have been quite strong, and until 83,000 where we have the call writers who have taken additional open interest positions, and we also see put writing has also begun at 83,000 levels. So if we start trading above 83,000 levels, then that would lead to lot of pressure on the call writers, and gradually they would start unwinding their positions, wherein you will be in a position to see that the put writers again building positions at 83,000 strike 2. So if that happens, then we will swiftly move towards next leg, that is 83,500, and approach towards 84,000 in the coming trading sessions. And today also, if the positive trend continues, we might see 300 to 400 points jump in Sensex alone. So we might cross 83,000 levels in today's trading session itself. So overall, PCR stands at 1.4, which is quite bullish, and at the money PCR is at 0.83, which is again positive. Next is Banknifty. So Banknifty compared to FINNIFTY, compared to Sensex and Nifty, did not perform that well, but still it closed on a positive basis. So overall, there was a high of 56,700 levels is what we had approached, and ultimately settled down to 56,621 levels. So still we are above 56,500 levels, which is what we had been expecting the Bank Nifty to close with. So since it is above those levels, the trend continues to remain positive. And if you could see from these levels, we are continuing to have the higher highs in the Bank Nifty too. So once we cross the previous day's high of around 56,900 odd levels, the expectation is that we will move towards 57,000 levels or cross above those levels too. So today being the monthly expiry, expect a lot of volatility to be there. There have been good writing that had happened at 56,500 levels, so that would act as a strong support, and once we cross maybe 57,000 levels, there can be a huge spike that can come up, and we might trade on a higher note beyond 57,000 levels too. So in today's trading session, let's see how it is expected to. So open interest will let us know where Bank Nifty is headed. So as you could see at 56,000 levels, there have been huge put writing that is very well evident. Similarly, at 56,500 too, though there have been writing from the call side, but still the put writers have been on a strong footing here. So until 57,000 levels, where the call writers have huge positions, they might not let go of and put lot of pressure until 57,000 levels to not cross. If at all we cross 57,000 levels in today's trading session, then the call writers would unwind their positions, and they would become weak. So we might swiftly see the put writing happening, but in today's trading session, whether that would happen, doubtful, because we do not have any major open interest additions, at least in yesterday's trade. So today on intraday basis, if we cross, then we might see a build-up happening from the put writers, which would hold strong towards 57,000 levels. So let's see, Bank Nifty at least is not that positive compared to Nifty and Sensex. So we might overall trade in the range bound kind of scenario between 57,000 levels and 56,500 in today's expiry trade. So PCR overall is at 0.9, which is positive and bullish. At the money is 0.81, again, which is good enough. Now, lastly, on the FINNIFTY index. So, FINNIFTY, though it had closed on a positive basis with 100-point jump, and has closed on a strong footing with 26,850 levels on closing basis. So overall, FINNIFTY is also on a positive trend, and this trend is expected to further continue. So once we cross beyond 27,000 levels, then next for us would be 27,200 and 27,500 in the coming days. For us, the support now would act as 26,600 levels, where we had been expecting FINNIFTY to stay for at least 1 or 2 days. And in fact, in yesterday's as well as in today's trading session, it firmly stayed above 26,600 levels. Now, if 26,800 is sustained, then we are headed towards 27,000 and 27,200 levels in the coming trading sessions. Let's see from the perspective of open interest. So open interest suggests that 26,800 levels, we have call writers who have taken huge positions, and even at 26,900 we have huge built up in the positions from the call side, and ultimately at 27,000 levels, which acts as a significant resistance. So in today's trading session, we might hover in between 26,800 to 27,000 levels for monthly expiry. If at all there is no action on the higher side around 27,000 levels, then yes, this would be the range. Else if we might cross 27,000 levels too. PCR, if we talk, is not on a strong footing. It is trading at 0.7, which is slightly bullish, mildly we can say. And then at the money PCR is just at 0.61, which is not that bullish. Now, next segment for us to discuss is the participation from the institutions and retailers. So FIIs on index futures have continued to hold 1.07 lakh contracts as shorts. On index options, however, they have cut down their short positions, and yesterday, as you could see, 30,491 contracts have been added. So overall, they have still continued to hold short positions with just 23,504 contracts. So they have cut down their short bets. Proprietary traders, on the other hand, had added longs in index futures with 17,000 contracts. So net longs for them now is 20,500 contracts in index futures. On index options, there have been additions in the long positions with 31,000 contracts. So net positions is 2.11 lakh contracts. They are long in index options. So yesterday's bullish bets have been beneficial for the proprietary traders, and they have made good amount of money. Clients, on the other hand, have cut down their positions in the longs on index futures, but still they continue to hold 55,900 contracts as longs in index futures. On index options, if we see, there have been unwinding in the positions, but still 1.62 lakh contracts have been held by retailers in the index options. So this is a scary thing, because FIIs have been adding their longs and cutting down their shorts. Proprietary traders have been adding the longs on the options, and still they hold a significant position in the index options on longs. And at the same time, retailers have been shorting the markets. So this might lead to a disaster for them and huge losses. So let's see how the expiry trade is going to be today. On cash market, domestic institution investors have been long with 3,073 crores being added in the cash market in yesterday's trade. But on the other hand, the FIIs have sold off their positions in the cash market to the tune of 2,428 crores. So one institution is long. At the same time, other institution is severely short. So we have to see in today's trade who is going to win. Now the last segment for us is the trending or buzzing stocks. Let's see. So first is MCX, Multi Commodity Exchange of India. So as you could see, MCX is on a rising spree, and in fact in yesterday's trade it closed with 5.43% higher. So the major reason for this rise was a detailed report from UBS, which increased its target price to 10,000 per share. So currently we are trading at 8,662 levels, and from here 10,000 per share is the target that has been given, which is roughly around 20% from these levels, so which is quite positive. So there have been several key reasons what UBS had outlined for this bullish stance. So number one is the brokerage expects trading volumes on the exchange to remain robust, driven by the heightened volatility in the global commodity markets due to ongoing geopolitical uncertainties, what we see day in day out. And the second reason is MCX has launched new products. So the recent introduction of electricity derivatives and monthly options for commodities like silver are anticipated to create new streams of revenue for MCX, and this is going to remain significant for them. So considering this, this would also be expected to see in the books as balance sheets is expected to rise. Similarly, the profits based on the revenues is expected to increase. So considering that, the UBS brokerage is quite positive about MCX stock, and from 5,500 odd levels we have been seeing this is on a one-way rally, and this rally might further continue. So let's see, keep a track on this particular stock. So the immediate support for us is going to come at around 8,000 levels. If we see 8,000 levels are being subsided and we start trading below that, then shorts can be taken up here. Next is Angel One. So Angel One had dropped in yesterday's trade with 3.25% and 96 points down. So this notable decline was primarily because the stock had been on an uptrend from last maybe 3 odd trading sessions, and previously also, if you could see, there have been a big rally that we had seen, and there has been a sell-off. Further it tried to recover, and now it is falling down. Whenever you see such kind of pattern is getting created, now we might see a sharp sell-off coming in from these levels once we cross 2,700 odd levels or 2,750 odd levels. Once you see Angel One trading below those levels, we might see a sharp sell-off coming in until 2,000 odd levels. So there have been huge buying at this zone. So we might see at every level the support coming in, but below this trading session, there are high probabilities that we might start trading lower. So that's it from our end. If today's analysis brought value to you, then don't forget to hit the like button and share it with your fellow traders. For all the daily pre-market report updates, make sure to subscribe to our channel and tap the bell icon so that you never miss an episode. You can also join our Twitter and Telegram channels. Links are given in the description. Thanks for watching, and we will see you in the next video.